Oh, thank you so much, David, and good morning, everybody. Price Headley here. Uh, BigTrends.com is our site, but we're focusing today on just one trading vehicle, one stock that you need to know in this day and age that has become a true leader. That's Palantir, PLTR. Everybody's talking about NVIDIA, Apple, Microsoft, Meta, whatever you want to talk about, but Palantir has really been one of the leading gainers in the S&P over the last couple of years. And we believe it deserves a lot of attention. Why Palantir? Because basically, they're at the forefront of AI, but they're also at the forefront of basically our Department of Defense. That basically, they're helping governmental agencies in this era that we live in with everything that's going on in the Middle East, Russia, around the world. You can see why there's plenty of concerns and plenty of needs for companies that are better processing data to give us an edge technologically when it comes to defense and other key strategic military and governmental needs. So this has been a really interesting stock. It's gone from the single digits up into the 150s. And the question is, where does it go from here, right? So the other thing I don't know about you, but in my 35 years of options trading, I think the biggest challenge that I face more and more every day, every year is information overload. You get a lot of information coming at you, and you have to make some choices about how you can narrow your focus, how you can laser focus. For us, laser focusing on just one vehicle at a time in each strategy here really gives us a way to, say, okay, we're not going to try to scan for hundreds of situations and kind of be dealing with that kind of a stress of which one do we trade out of? Because what happens with your mind, trading, as you know, a lot is a mental and mind game where you got to get your mind right. And what happens with your mind, if you have too many things to choose from, what do you think your mind does with too many choices? It ends up freezing, end up basically doing nothing a lot of the times because you're basically conflicted if you're looking across multiple time frames, if you're looking across lots of things. So anyway, I could go on and on about the psychology of trading. I'll weave that in today's more technical indicator approach. We're going to share with you a couple of our favorite indicators to trade Palantir. And let's get right into it. As we get rolling, just of course a reminder that everything that we share with you in today's presentation is based on our proprietary research, and it's intended for illustrative purposes only. What we talk about here should not be considered specific advisory recommendations. As you know, stock and options trading have large potential rewards, but let's face it, they also have large potential risk. So you've got to know how to manage both sides, and we will talk about both sides of the coin in the equation today. Remember that the past performance of any trading system or method that we show you, including our Palantir options history, is not necessarily indicative of future results. Future results are going to vary, right? Sometimes they'll be better than expected, sometimes worse than expected. The key is that you've got to have a system to basically take what seems like the chaos of the markets and turn it into order, turn it into a pattern that you can replicate and repeat and rinse and repeat again and again. So see our terms of use on our Big Trends homepage for more information on how we operate now in our 26-year at Big Trends, and I've been trading options for more than 35 years. So, but what I love is harnessing the power of leading stocks. When I got started trading and coming out of Duke University in '89, and basically started trading, and it was the names like Microsoft, Intel. As the decade of the nineties went on, it was Yahoo and the big internet stocks. Those are the ones that, of course, I cut my teeth on Amazon and whatnot that allowed me to launch BigTrends.com in November of '99. And so, but what I was always told people is that, the people would say, oh, this stock's a bubble or this sector's a bubble. And I'm saying, well, you know what? Bubbles are often happening and they happen a lot longer than people would expect because of big growth stories and because of big sector moves like what we've seen with technology, because of the AI wave, right? Artificial intelligence is driving a ton of gains in those big leaders like Palantir and others. So we're going to show you a bunch of success stories when it works, also show you when it doesn't work. What do you have to do to kind of clean them up and move them on if it's not doing what you want to see? We call it Palantir Options Trader because it's basically all about just focusing on Palantir, and we're just buying calls or just buying puts. We're keeping it really simple. We're not trying to do any spreads or other kind of more complicated setups. So we'll walk into the trading strategy and show you how you can start getting these trades as early as later today. But basically, let's also, or tomorrow morning, really. But basically, I've been trading on my 36 year stocks and options. Founded BigTrends.com November '99. So it's always been about a systematic approach, right? Everything I do, it's got to have a quantitative edge. If you can't define what your edge is, you should not be trading. So you need to know what your numbers are, like not just how much your winning percentage is, but how big do you win when you're right? How small do you lose when you're wrong? That's the thing that a lot of people miss when they're asking us, hey, how much do you win? Well, that's only part of the equation, right? And then of course it's capital allocation. So you got to be consistent in your capital allocation. and that will help you. I've been blessed to be featured in a lot of places and then inducted into Traders Library's Traders Hall of Fame back in 2007, joining a lot of my trading heroes. I devoured a lot of the trading textbooks when I was up and coming, right, basically in Duke and graduating from Duke, but basically always was hungry for more knowledge and hungry for more edges. And still to this day, it's about keeping that cutting edge of what's the next big opportunity, right? But my goal for you is to borrow from some of the things that have worked for me. So you should say, okay, well, why should you care about this one on Palantir Options Trader? We're going to get into that and show you a history, but we're going to start with talking about the strategy. So we actually divided into two halves here. We've really gotten more and more in the last several years into what I would call hybrid approaches to how you exit, right? So a lot of people want a higher win rate, but then they also want the big gains. They want the best of both worlds, right? I get it. We all want, and of course, when you're on a winner, you want more of. I wish I bought more contracts on my winners, and then when you're on a loser, you're like, I wish I bought less contracts or didn't make the trade, right? So part of this is kind of narrowing down the profile to say, let's only take the patterns that give us the best of the best. And we got several different patterns we're going to walk you through on the percent R indicator in our unique way that we look at it, along with some ADX, average directional movement confirmation indicator as well. So, but the beauty of selling half at a double, of course, is that you want to get to a risk-free position. Why would you care about getting risk-free? We all know why, because you feel like, okay, I got my money back. You get your money back on a trade, but you still have something left. You talk about freeing psychologically. This frees you up mentally, not just worrying so much about your money or financial risk, but basically frees you up from the psychological fear we all have of seeing a winner turn into a loser, of saying, oh, I should have booked it earlier. Why didn't I book that profit before? And now it's flipped on me, right? So this frees you from that fear, right? So the beauty is when you are freed from that fear, you basically now have the opportunity to let a trade run. Now, we won't let it run indefinitely. We're buying relatively short-term options here. We're buying options that are going to expire into the next Friday's expiration, right? So we're not buying this week's expiration, but Palantir, like a lot of big name stocks, has weekly options that expire every single Friday. So what if we get in anytime the week before, we feel we can run it for 5 trading days. So our rule is give it 5 days, or if it gets up to 1,000% gain, then we would take it out. Most of the time, the big runners will be 500, 600. We've had, I think, an 800%er not too long ago. But if it got to 1,000, of course, we would just say that's enough. Take it down for the more than 10 bagger and be done with it, right? So you sold half at a double. If you sell half at a whatever your next level is, right? If you sell the next half at a triple, then you average 150% on the whole position, right? If you sell it for more on that last half, great. By the way, if the other half goes to nothing, you're back to zero, right? You would make 100, lose 100, average those out, comes back to zero. So your worst case is a break even. But a lot of times what we'll do is we'll trail our stop on the price stop. Once we get a double and half, we'll trail that other half position up to a break even typically. So preferably. So the only time we might get stung on that is maybe like on an earnings play. We had an earnings play that didn't go for us, and we still made a bit of money, even though it gapped the wrong direction. So we'll show you that example too. So but I always say that trading is not an all in. It's not an all in or all out, not like a hold'em poker or whatever. It's basically many shades of gray. So by selling part and then letting the rest trade run, you can really get a chance to turn these into something meaningful here. So, and this isn't even our biggest second half example, but I want to talk through some of the indicators here. We're talking about what we're looking at and what we've done. Many of you may be familiar with this middle panel indicator in green here. It's Larry Williams percent R percent range indicator. Okay, so what we're looking at is actually we divided it into three three triads, if you will. 33%, a 67% up here. So this is the 67 line. If you can't read that 33, that just mark through. It's a 33 there. So percent R can range from 0 to plus 100 the way that we look at it. I know Larry Williams, he's a true innovator and great guy. Always fun to catch up with him. And he uses more of a negative scale. I just like the positive grade school scale. It just makes a little more sense to me. So we kind of reconfigure it for the 0 to 100 threshold. Plus 100 is our maximum, right? So if you're at plus 100, that would be like at the top of a given range. And you can see you don't necessarily close at the top of the range on any of these points. So you might get up into the 90s up here, but you don't get quite to 100 because we're closing right near the top of that range. But there's a tiny little tick above it where we're not quite at the top of that range based on that day's high, that bar's high. Now you can see what are these bars and these candles in this case. These are 30-minute candles. Okay, so we're looking at this every 30 minutes, but what we're looking for as an action point for entry is in the first three 30-minute candles of the day. Now, this is not designed to be a day trading strategy, it's still designed to be a swing trader's approach. But the key is that we're looking for speed to get in, right? And speed to adapt to the change in the trend. Now, the other thing we're looking at, so we're looking at the ADX, and I'll go through the percent R ranges here in a second, but you can see here ADX is typically showing you a trend in motion. So when you saw ADX rising on the left side of this chart here, and the stock was dropping, that was showing that we were in a downtrend, right? You can see that the stock's dropping, ADX is rising. And you say, well, then why would you get into a bullish position? Well, because what we want to see is that we come out of the bottom third of readings, right? We don't like to try to catch a bottom. We come out of the bottom third of readings here, and we're saying, okay, by the end of that 30-minute candle, we're trading in the neighborhood here of about what, maybe 76 and a half. You can see we're buying the 86 strike calls, almost 10 points out of the money going into the next Friday's expiration. That was on a Monday. So you had almost a full 2 weeks to get in. You can see we're in by about 11 o'clock in the morning. It'd be our last candle to get in, last 30-minute window to get in for that particular trading day. So our next trade could come as early as tomorrow morning, either at 10 o'clock, the first Wall Street time half-hour close, or 10:30 or 11. So we don't try to buy anything right off the open, right? This one gapped down, you can see, and it had a big reversal back up. So that's what you want to see is that flip, ADX flipping over, says the trend down is likely ending and we're coming out of an oversold mode. We think there's upside to come. So that's one of the kind of buy the dip, coming out of the dip strategies. Okay, so that's the first thought. And then from there, you say, okay, we're getting in right off of that 30-minute close, third 30-minute close of the day. Where do we get out? Well, two things. One, if we generate a 50% loss on a trade, we will say capture back half of your capital, take the hit, and move on. You say, well, that seems steep for other traders that might be used to taking really small losses on their stocks. And we're saying yes, but you have to make it relative to the point that Palantir can be volatile. And you need to not get whipsawed out. If you put a tight 20 or 25% or even 30% stop on something, you could get whipsawed out and then it goes on to your target, right? So what we're looking at is we don't get on this gap up here. You see, we get the first big, put a G on it, get a gap up here. You'd think, oh, well, here it popped from 76 up to about what, almost 85, and we didn't quite get it. So you see, well, then it has to retrace back down. So we're still sitting there with no profit booked as it comes back down. And I bet you during this window here, we're sitting on a slight loss because the stock's back to almost where we got in, and we've lost a day and a half, almost 2 days of time on that trade, right? So the time decay is your enemy as an options buyer. We know that, but we've seen that there's enough of these that will hang in there and then get going again. You can see this one gets going up here, gets up into the high 80s. So now we're in at $268 a contract. We're assuming on these examples we show you here that we can get into up to $1,000 a trade. So we couldn't quite get 4 contracts that would push you over 1,000. So you get 3 contracts, 3 options contracts where every contract controls 100 shares of stock, right? So we're controlling 300 shares of Palantir that would have cost you about 22 grand and change. And we're controlling that for just over $800. So you can see here that you're getting a lot of leverage potential, and then we sell, in this case, can't sell we can't sell one and a half contracts. We have to round up and sell 2 contracts. We get a guaranteed profit on this trade because you see we sell 2 out of, when it doubles at 536 off the 268 entry times 2, 536, there's 100% gain. You're locking back down $1,072 relative to the just over $800 you put in. You still have 1 contract left, and you're looking for that runner. And you can see that what happens is at first it goes a little higher after we get out, and it comes back down. We kind of base out. So where are we getting out here? Remember we said we got in on a Monday. So our rule is that we get out by the next Monday afternoon. So the next Monday afternoon, you see there's the next Monday morning. Next Monday afternoon is hitting right in here. So you can see we're just marking that last hour of the trading day. So now the stock's trading up here around 93, and we're able to sell the 86 calls. Worth about $7 intrinsically, right? An 86 call means you got a right to own the stock at 86. It's at 93. It's worth $7 intrinsically. There's still Four more days to go before it expires that following Friday, and you see that we're getting a little bit of time premium left there. 825 is our exit on the last contract. You make 207% on the final piece of your position. That trade generated $1,093 in profit. Of course, commissions are way down, so when you take the commission out of that gross profit, you might have a $6 commission, $3 in, $3 out on your contracts, and make 187 bucks or so. Or I'm sorry, 1,087 bucks, excuse me. So basically, still well over $1,000 for a week's work, right? So that's encouraging. That's only on up to $1,000 invested. You can scale it up and do more as you gain confidence in the system. But I always recommend to new subscribers. I've got a great new subscriber special for you at the end here. But bottom line is that you've got to focus on building your confidence. A lot of this goes back to psychology, right? That you whatever I can give you the best system in the world, but if you don't believe in it, then you're gonna potentially be like, oh, well, I don't trust it. Then you see some winners, then you rush in a bunch of money, then you have a loser, and then you're kind of playing that oscillating emotion game, right? We want to take that out and say, if you start small and say, just execute it based on a small amount of money per trade, then basically you can get yourself in that position where you can now focus on how I can do this. So we'd say do it with as little as two contracts to start. So you're just doing two contracts to start, you would have put in like uh about 500 uh, 550 bucks or so. So the idea here is that, okay, our basic strategy guidelines are we will not hold it more than the 5 trading days. Even though we had like almost 10 days in that last example, we're only giving it the 5 day window, right? That's like where we think the big growth is after we've gotten a good signal. And so we want to catch that growth, but then we don't want to let it slip away, right? We don't want to lose our edge as that edge diminishes over time. And then, the risk reward dynamics start to evolve and potentially change the longer you've held a position. If it's run up, it could reverse on you in short order. You don't want that to happen. So we kind of book them, Dano, take the profit and run, especially when we get that first half out of the double. So the strategy here is looking at several different percent R setups combined with ADX as a confirmation tool or a non-confirmation to kind of weed out the noise, analyze on that 30-minute at a time candle chart, right? And so we're trading the next Friday's expiration. So even if we got in, say, this Friday morning, we could trade it to the next Friday. That would be cutting it a little close, but you can see that that would still be before the expiration. Buying a call or buying a put will show you both. So we're looking at that 30-minute. That's kind of unusual for us because a lot of times we like the hourly for swing traders. We like to use a variety of daily chart setups as well for different systems that we run. So this is a little faster paced one. I'm not a big fan of the 5-minute, 10-minute, 15-minute charts as much these days because there's so much noise, right? We want to find the bigger trend, the bigger fish, and we want to throw back the little fish, the little trends for somebody else, right? We're looking for that really meaningful signal. So like we said, Monday through Friday, signals can trigger up until 11 a.m. Eastern, the first, as we show you here, the first 90 minutes of the trading day. And so the windows of entry are either 10 a.m., 10:30, or 11. If we don't have a signal there, we just wait till the next morning. Okay. So that gives us a great way to focus our energy. And also, that if you don't see a signal by 11, then you're not getting a signal that day. You wait till the next one. So you don't have to sit around screen watching or wondering what's next. You can always call our 800 Big Trends number too if you think you missed something. But the idea is that this really gives you a way to eliminate noise, focus on that next week expiration, not cut it too close, right? The Warren Buffett would say you need a lot of runway to make sure something's taking off. This is enough runway for us for the speed. We wouldn't want to trade it too close and not get the takeoff and be risking too much decay in those final days of an expiration. So we'll scan for this every single morning, looking for plenty of trade opportunities, plenty of profit opportunities, and then managing the risk on every single trade, right? So gives you a lot of bang for your buck, right? Because you're really, like I said before, you're really getting a pretty low, each option contract controlling 100 shares. You can see our average on contract price since January 2024 was 83 cents. It's been a little higher lately because Palantir, as you know, has rallied quite a bit, right, in this last couple of years. And so Palantir right now trading at 150, almost on the nose, 150.07. So, the fact is we might even pay a couple bucks, like we showed you that last example, 2.5 bucks or so. So the bottom line is that that's still fine to control potentially $15,000 worth of stock on each 100 shares, right? You're getting a lot of leverage. If you paid 150 bucks, a buck and a half on an option contract, the way they're quoted, that would be like 100 to 1 theoretical leverage compared to the 15,000 you pay for the stock, right? So it's a beautiful thing to get that exposure, but really have a lot more limited dollars at risk, right? Because what people forget is that, okay, sure, what if Palantir tanks, right? If Palantir tanks down, 10 points, well then, you theoretically could, hopefully you'll hit our 50% stop, but even if it got a big gap against you, you've still limited the dollars at risk that you're controlling against the stock. If you've got a couple hundred shares, or in the examples we were just talking about, even 100 shares, then you gap down 10 points, that's a $1,500 loss. That's more than the amount of money you'd be putting into that option to control it might be, a couple $100 at most. So you're limiting those dollars at risk compared to being a stock owner and getting caught with a big surprise, right? So, but still getting a lot of the bang for buck when it pops to your upside. We'll get out 5 days later if we've gotten the first target of a double, or we haven't gotten stopped out at our 50% stop loss, right? So those key things are in there. So you say, well, okay, so don't show me pick and choose, show me all the trades, looking at the overall performance, and reminding you, of course, that past performance never guarantees future results. Future results will vary, but what we rely on is that we will be consistent in a capital allocation, consistent in execution. When we have an entry, we take the entry. When we hit a stop, when we hit a target, we follow those rules. So having a rules-based system makes your job coming in as a subscriber a whole lot easier, right? You're not having to worry about being right did I make a good pick? It's just saying your job becomes, did I execute consistently? When I got my real-time email, we'll send you a real-time email, and you can also get set up for the mobile phone updates on your smartphone with text alerts too. Bottom line is that, it's about following that system, right? So you see a $5,000 model portfolio grew to over 30,000 bucks in just the last, you can see here, about what now on our 19th month here. So averaging more than $1,000 a month, if you think of it that way, on an average. Obviously, it's scaling up over time. But what doesn't scale up, the reason this is actually shown what I think is reasonably conservatively, is that we're not bumping up our allocation of $1,000 maximum per trade as it grows from a $5,000 model portfolio to a $30,000 or so model portfolio. By the way, these examples are before commissions and before subscription investments. So factor those accordingly. Like we said, commissions have come way down. So not the big factor, and it's just a single leg entry, single leg exit. So minimizing those costs. But the point is that, okay, now if you're at about 30,000, you're putting $1,000 in a trade. That's just like 3.3% max risk on that one position that you're putting on versus, of course, when we started, it was closer to 20%, right? But the idea is that we're not chasing trying to get more and more capital into the next trade and the following trade and the following trade, because if you do that, even if you catch some run-ups, you will have scaled up right into your next drawdown, right? At some point, you will go through a drawdown. That's a reality of trading, right? So we want to kind of smooth out that experience, not just financially, but psychologically and emotionally, that you don't get too high or too low that causes you to risk giving up, taking too much of a hit, and then smarting from it and saying, I'm not going to do that anymore. We'd rather you follow it just slowly and steadily, kind of the tortoise and the hare, but being the tortoise on your capital allocation will keep you in the game for the longer haul, is what I've found. So bottom line is that we said, like, gross gain of more than $25,000 before commissions, before subscription investment, allocating no more than $1,000 to trade the entire way. And so we'd still be using that and saying, yeah, that's there's nothing to sneeze at there. And you're saying only 25,000, it's been a great market. Well, we only started with five, right? If you started with 50, you could theoretically take it up to 300, right? But the point is that you can't know that that's what the next 19 months are going to look like, right? You know that past performance won't guarantee the future. Future results vary. It could be less or more going forward. So we always want to have we always would say, like, your next drawdown's ahead of you, right? Just don't think about the reward, think about the risk, and make sure you can stomach the ups and the downs of any strategy, because it's Palantir, right? It's going to move a lot. So we're going to have to manage both the upside and the downside. So like I said, our setup here, talking about indicators, it's an indicator-based day to day. We're using Larry Williams percent R. Now, if I didn't define it better before, if say you had Palantir trading between, let's just use a round number, say it was trading between, say right now it's 150, say it was trading between 140 and 160 over the recent look back period. And by the way, when you become a subscriber, we'll give you all the settings and parameters we use for these percent R and ADX filters. But the point is, percent R, if we're trading 140 to 160 and we're at 150, where would you be on a percentile basis? You'd be smack dab in the middle of the range, right? You'd be at the 50th percentile at 150 between 140 and 160, right? You'd be 10 points off the low, 10 points under the high, to be right in the middle. Obviously, if you're at the high, that'd be 100% at 160. At that low, 140, you'd be at 0%, right? So we're looking at the stock price relative to where it's been on our unique, it's a longer percent R setting than what most of the chart platforms will default you to. So don't use a traditional chart platform percent R reading with what we're showing you here. It won't help you. It'll be too noisy. So we smooth that out. So the top third and the bottom third are actually our bullish zones, ironically, right? You would think if you're in the top part of your percent range that that would be overbought and that would be bad, right? But you're going to see some really powerful examples where when the institutions start pouring on the gas, percent R will stay high because as it makes new highs, it loses the old lower price data, stays at the higher price data, and percent R just hovers in the top third of its readings on the super bullish uptrends, right? We'll use ADX to confirm that. Now, we also will see bearish signals if percent R gets too high with the right ADX reversal setup. That's kind of a very unique bearish pattern. It's allowed us to be a little more limited on our bear trades and really focus on the bullish momentum Palantir. But when it does show you that turning point, we'll be ready for it. So like I said, exact settings go to subscribers. You get it as a rule sheet and all the parameters are given as well. And then of course my team's always standing by. If you've got questions for me and my research analysts, we give you as a subscriber a dedicated access to reach us anytime you've got a question. So here's a great example of that, like big breakout, staying in the top few percentiles of the readings most of the way and saying, man, what a power trend that was to the upside. Okay. So there's your breakout, big gap, right? You got a big gap up. A lot of people see a big gap up and they think, "Oh, I shouldn't chase it. I don't want to be foolish. I don't want to look like I bought the high and then it reverses on me," right? We've all been there. Again, I'm weaving it through a lot of the psychology stuff in my 3.5 decades. Sure, I've felt plenty of that. Am I just being another FOMO trader trying to, am I feeling like I missed out and now I'm chasing, right? You've got to have a system that says this is a trade worth taking. And our rule is that you can see here that we're getting this big surge to the top third of readings, and you see the what's the ADX doing? The pink line there on the bottom, it is trending up, right? So ADX is trending up. That's a confirmation that we believe that the uptrend has more life. And what's really powerful about this is that you see that remember our first target? Our first target is it a double, right? That's target one. The next morning it gaps up. And so when we put the stock on, it was trading here. You can see maybe just under 50. We bought the around 49 and a half, about the 52 strike calls, maybe 5% or so out of the money. And so they were trading at a $1.08 on average, right? You can also get a sense of, okay, as a percentage of the stock, that was about 2% of the stock price at that time, give or take. You can see, so on $1,000 invested, we can get 9 contracts at $108 a piece that have us in for $972 before commission. And you can see that the classic, what I want to see is that we stay strong and that even if we go through a pause phase, it's not giving back much, right? You go through a little flag pattern there most of that first day after we got into the trade. We're still up because it's trended up early on after we got in there right off of that 10 a.m. signal. And you say, okay, we get that signal, we take it, and then we're still working our way higher, and then the gap up happens the next morning. So it's gone from 49 to 53. We're about a buck in the money now on our 52 strike calls. That was on a Tuesday, by the way. So we're going out to the next Friday. We had like 9 days total to go from our early morning entry. So you see, we get a little better than that in the gap up than our 100% expectation. We get 121% on the first, a little over half, right? You can't sell 4.5 contracts. We round up, we sell 5. And so 5 out at 239 a piece, you can see you're taking down almost $1,200, 1195 versus your initial just under $1,000 entry. So you're already taking down a couple $100 of profit, even if the other 4 went to nothing, right? But here's the power, right? Look at this. The other 4 contracts, where do we get out? Well, you can see if you've got all kinds of stuff you can look at. We looked at, well, what if ADX rolls over? Well, in this case, you can see where ADX rolls over would have been the better exit in this case. But sometimes ADX will roll over and then it'll rocket yet again. So ADX rolling over does not mean that the trend has to change. Sometimes it's kind of just like a end of the power trend, but it can still work its way a bit higher in our expectations. So we give it the full 5 days. So that Tuesday afternoon, that following week on the expiration week, you can see we're hopping out here on that Tuesday afternoon in about the final hour, and it's trading up just under 60, right? So you can see the 52 calls at about 59 are worth $7 intrinsically. We get out at 780. Remember, we paid only $108. Now we're getting $780 on those last 4 contracts. That's a 622% return, more than a 7-bagger. And you can see, of course, in dollars, every one of those contracts made us a profit of $672. So you multiply that times 4, and you're talking about more than $2,600 off of the final part of the position. 2,600 out of that 3,300 total profit, you can see is pushing into about the 80% of our profits come from the final runner piece, right? So that's very typical in my options buying experience, not just on Palantir, but across my 35 years of options trading, is that your really big winners can amount for the majority of your profit. It's why you want to have a runner portion still, right? I've seen so many traders who are happy taking a 30, 50, 100% gain on their whole position and thinking you can't go broke taking a profit, right? Well, you can leave a lot of money on the table that way. And you say, well, what if you held it all and you could have made even more money if you held the whole thing to the 600%? But the idea is that we want to take that edge off. We don't want to, we'll show you an example where we didn't make money in the second half and that was good to take it off on the first half. So the point is, once you get the double, we take the full 5 day rule and just give it a chance to keep running. Time is on your side on your best ideas historically, right? So you want to, when you're right, you tend to be right quickly. You want to give yourself a chance to be even more right when you've got that big winning trade. So here's an example where we actually took a second half loss and we still made money on the trade. And this is the one that came into earnings. Okay. So my favorite time to hold into earnings is typically for me only when I've already gotten my risk capital out of a trade. So in this case, you can see here's a great example where ADX is trending up at first as we get into this trade here, right? ADX has been trending up. We've got the super strong reading here. It's coming in on a Thursday. We're buying the next Friday's expiration. We're buying the 84 strike calls. Usually when it's late that prior week, you don't have to go quite as far out of the money. We were about 78 and a quarter. We got that signal just about under 6 points out of the money. We get in, and then the very next bar, we're wrong. Now, have you ever had that happen? You get in and you feel like you called the top. We're wrong there, right? You cannot get overreactive to that. And this is why we say we don't just use ADX as an exit, because it does bend the ADX down for that one bar. But that's what I would call a bend but don't break pattern. It tests that and then it starts rallying again later that day and into the next morning, right? So you can see that next morning it has popped all the way up here to about 82 bucks, and we're locking down our first half double. We bought 12 contracts at 83 cents a piece, 83 bucks a contract times 12. And you see that we were able to get 6 of those out right at the 166 bucks a contract target. Now you have a free trade with 6 contracts left. Earnings are coming up that following Monday morning. You can see what happens. The earnings are a disappointment initially, and the stock has the big gap to the downside, right? You see it opens down here at about 74. We had closed the prior day up around 79. So you know how it is, not just being on the wrong side of a trade, but also getting the earnings volatility implosion and that implied volatility of that option that we're holding. It was out of the money, right? We actually see the stock recover by the next Thursday per our 5 day rule to actually above where we had held it in front of earnings. It recovers to 81, but the problem is it's only got a day to go on that Thursday afternoon. It's got an 84 strike. It's looking pretty unlikely, right? And you can see those 6 contracts are sold at a 2/3 loss. We get $26 a contract back, and yet we still make $156 on the whole trade because we had taken down the first 6 contracts at the double, right? So you average those two pieces out, you make a little money on the whole trade. It's not anything to brag about, but it just shows you the power of smoothing out your experience. Sometimes, of course, you'll catch an earnings gap in your favor, and those can turn into multi-100% winners too, right? So the idea is that this smooths out your experience. It makes you a more stable trader while still having a growth mindset, but being sensible about taking profits to get your risk money back and then riding the rest when you do have that risk-free trade on. We'll typically find an average of about 6 to 8 new Palantir options trades each month. That doesn't sound like a lot, but you don't need a lot, right? Sometimes, and here's another kind of an eye-opener here. You see, this is a nice steady uptrend on our top third of our percent R readings type of a setup here, right? So what we say is that, okay, check this out. This is the first trade we did here. So you can see this, we'll call this trade A, here, and you can see our A1 target hits right here at 100%, and our A2 5 day exit hits here right there. So you can see we're just steadily riding. You know, we bought the 111 calls when the stock was trading just under 102, about 10% out of the money, right? That's fairly typical. You see, we paid 177 bucks a contract. Again, compared to the stock price, that's less than 2% of the cost of the stock. Getting 5 contracts in at 177 bucks a piece. So we got 5 of them out at target A1 for the double, and then we close the remaining 2 at 315%. But here's the thing. Once we get the first half risk-free position taken on this trade, we can get a new signal entered on Palantir if we've gotten a risk-free trade on the prior signal. So you see what happens right on this, and you see that was a $1,650 gross profit. But let's look at right after we got our first profit target. Look what happened. That same Friday morning, we actually put on trade B here. Said it still checks the boxes. Super strong percent R with an uptrending ADX. We should be on another position here. So at that point B, we bought the 118 strike call as the stock now trading near 108. So again, about 10 points out of the money. And you can see here we were able to get 6 of those contracts at 153 bucks a piece, right? From that Friday to the next Friday is what we're buying as an expiration there. And you say, okay, well, but we're buying a different strike price. And of course, then now trying to ride this, what we think is bigger trend. So at point B, we get a full position on, plus we have point A's half position left. So we actually have like 1.5 times the exposure we would normally have. But if you think about it, we have no risk in that first piece of our position, right? You do have risk in the new position. That's a fact, right? So you get that first run up and you see you don't get to the first target there, then it runs down on you, right? So on position B, we're basically nowheresville into that following trading morning on the first pullback. That doesn't concern us, but we say, look, here's what happens. Now, after we've taken the second profit on that A position, we call it A2 there, look what happens. The first target on B1 is hitting 100% up here, right? So we're taking it down there that Wednesday afternoon. And remember, we've got an expiration coming on Friday. And a lot of people would fret that and saying, I don't know if I want to hold it into a Friday. That seems like I'm holding it too long. But guess what? You've got a risk-free trade here. So into this wiggle and even this morning whip or late day whip right there where you're saying, oh no, I've given up some profit versus where I just took my double. Now it's down to maybe a 50 or 60% win at the end of that day. And you think, uh-oh, what's going to happen? Was it going to gap against me? And I'm saying you shouldn't care. You should basically be focused on the fact that you have a free trade, give it into Friday. And look what it does. It goes from that day's close near 116 and the next day rips all the way up near 125. You can see it closes 124.28. In that last hour around 3 o'clock, we're taking it down up near, you can see here, even a little bit higher. We took it down for 1170 or 664% gain. That was an even bigger winner on the second piece. Think about if we had missed that second one because we were like, oh, we don't want the extra risk. If we had just ridden the first trade and missed the second one. The second one was even more profitable, right? More than double the profits of the first trade in this chart. So the beauty of that is that that's the philosophy is that when you're on the right side, you want to figure out how can you get more chips in to trade that's producing for you, especially when you've gotten your risk capital out of that first piece. Okay. So that's an interesting approach to help you get more exposure when it's working. Now, here's a put trade example. They don't come around as often. But what you can see happening here is that if we've got a strong move that's happened to the upside and Palantir on the left side of the chart. We've got a reading here over the 90th percentile in the percent R, and we've got ADX rolling over here, saying that this uptrend is likely ending. We will take that as a reversal signal, and you see at the close of that next half hour there on that Tuesday morning as it tried to rally and then failed. We've got the stock trading in the neighborhood of somewhere around 96 and a half. We're buying about, you can see, looking down about 9.5 points below, just over 10% below, we're buying the 87 strike puts. So you can see we could get on $1,000 max, and you get 7 contracts in at 132 bucks a piece. So you're controlling 700 shares of Palantir, right? That's a pretty substantial investment there. Where you're controlling something like what, over $60,000 worth of stock for just under $1,000. And you can see it starts popping down over this next couple of days. And you see we're starting to reverse down. Here we go. We popped down to about 90. We haven't even gotten to the strike price yet, and our 132 bucks has turned into 264 bucks. We take down half or just over half our position at the double. We still got 3 contracts left. And this is what allows you to, as we get a really good fill off of that Thursday morning quick pullback, then it reverses back up. And a lot of people are going, what do I do up here? And we're saying, look, you've got your risk capital out. You took half of, or just over half of it out at a double. You've got a guaranteed small profit at least, even if the other half goes to nothing. But you see what happens is we don't get faked out by that. And then you get this waterfall decline here, followed by another quick waterfall decline here. Now, as it turns out, our 5-day rule does get a little bit of a retracement back up off those lows. Some people would say, "Oh, I would have cashed in on that gap down and taken my windfall." But we're saying, hey, sometimes they keep on gapping, right? That prior gap, it kept on dropping. So our 5-day rule got us out in here when the stock was trading close to 82, about $5 in the money on that 87 strike put, right? To sell it at 87 down to 82, it's worth at least five, right? We're out at 545, with still a few days left to go. So there's a little time premium in there too. We take down 312% on that second part of our position. So you end up on, as we talked about here before, what did you get into? About $924 in, got you 767 bucks back, almost a triple on average on the position as a whole. But we took that one extra contract out at a little bit lower profit compared to the final profit. But the beauty is, hey, that works plenty nicely. It's a way to take advantage of it from one week into the next and not holding it more than the 5 days in both bull and bear examples. Now we got to talk about losers, right? Let's look at a loser because, of course, they're going to happen, right? And so you need to know how to manage that. So here's an interesting example where we've got Palantir 102 calls and we've got the big gap up, right? We've got the firming up here into that third last signal bar at 11 a.m. Eastern time on a Monday morning. So we're buying out the next Friday's expiration. We're buying the stock's trading here about what, 95 and a half, almost 96. We're buying the 102 calls. That doesn't seem very expensive, right? They're trading at 230 a piece because you're going out to the next Friday. You can't quite get five of those. You get four of those in for about 920 bucks total on your 1,000 bucks maximum as this example. Now, you see, initially we're wrong. That doesn't really worry me that much actually when I see that we're wrong a little bit because look what's happening. Percent R is still staying in the top third of its readings here, that green line there, right? Above that pink threshold line. And look what ADX is doing. Even with that pullback, ADX is still rising. How is that possible that ADX can say we're still trending up when we even slightly undercut the low of the first gap bar there, right? So you say, okay, we've undercut that. Is this now turning? But the fact that ADX is trending and we've been moving higher, the reason that it's still trending up is that you're losing data. I'll put an L on it back here and before that was below where that even recent pullback data is, right? So we're pulling back into 92, but the data we're losing is in the mid to upper 80s. So you're still picking up that the trend is working to the upside. And as it turns out, that's correct that it ends up going on up here. You can see to about 98 and a half. The problem is it took a little bit of time, a couple days for that to happen. And you see that basically we were still out of the money by about 4 points. So we were profitable at that point, but didn't get to our target. We hold it and you see, then you get a gap against you, right? You say, oh, well, the ADX would have told you to get out. Well, the ADX is already feeling some pain by the end of that bar. We're getting out uh, middle of that same day where it's hitting down to our 50% stop loss. And we're saying, okay, maybe it was a 30% loss after the gap down. We gave it a chance to snap back. It didn't. We took the 51.3% give back, sold those four contracts out, closed them out for 112 bucks a piece, just under a 50% loss, 51.3%. It happens, right? So a big part of this is remembering that losses are going to happen. You should never get greedy. You should never expect that it's always going to be the wind at your back. Sometimes it's in your face and you got to know how to manage those, right? But let's talk about that big leverage potential. Here's one that went from initial $71 entry price all the way up to 525 bucks for the 71 bucks you invested here. This is the 59 strike calls on Palantir. And you can see in this example, super strength, right? And you say, well, didn't you say super strength could be bad? I'm like, well, if ADX had rolled over, it could be. But on our entry window, ADX is rising here, right? So we like the start of that trade, and we're getting in here when the stock's trading here near 57. Okay, so 57, we're buying just about $2 out of the money, and you can see here that we're only paying 71 bucks a contract, right? So here you can see it's like maybe not quite, maybe 1.25%, 1.33% of the cost of this of 100 shares of stock to control that for just 71 bucks instead of the 5,700 bucks you'd put into on 100 shares, right? So the beauty of that is that we're targeting the double. It gaps up the next day, right? So we're on that momentum train, right? You see how it's just grinding higher, nice set of higher lows, higher highs, and then we get the gap up to almost 60. We're going in the money. We're cashing in half of our position at a buck 69. You can see that it does end up retracing back down, right? That retracement doesn't panic us because you can see that we're still holding above there. In fact, because we're now at a risk-free trade, even as it goes under there, right in this area here, we're not panicking. In the old days, I'd probably would say, yeah, I don't like that breakdown. I'm going to end up out somewhere around this X. We didn't take that though here. We said give it the 5 days, and that allows you to catch that surprise back the other direction because you can see in retrospect, there's a ton of support in there around 59 bucks, right? It's just holding those recent lows pretty nicely. It's just the structure of the chart was getting a little sloppy, but we were in a risk-free position. So we gave it the 5 days from one Friday to the next. And as you see here, we got out a little bit before the end of that day because we didn't want to take it right into the expiration. So got out closer to about 2 o'clock on that Friday, and we said it's up to 64. So we were able to sell it out around 525. Not much time value left, but you see $5 of intrinsic value. Get out at 5.25. You just paid 71 bucks to get in, get 525 on the way out. That's 639%. That's more than a seven bagger for that 1 week's work, right? So you can see that's where a lot of your profits are. And so we end up making $3,800+ in profit before commissions, right? 14 contracts in, 14 contracts out, be about 28 bucks of commissions round trip at most with no ticket charges, right? So that's a beautiful spot to be in to not get whipped like the rest of the crowd. Let's face it, a lot of market participants will be reactive to the recent action and price and recent momentum on the downside. You can see as we might have whipped ourselves out based on old structural analysis, but we're saying, look, we've got a free trade. Give it the chance. Give it the 5 days. Sure, it'll take you into expiration. There's a chance that you could see that crap out on the second half when we do that. But you know what? It's worth that risk. If that had turned into minus 100%, this ends up making you over 600%. You can see that's more than 6 to 1 in your favor versus the max risk on that last half of your position. In this example, obviously it's variable, but the idea is that you see what you could be giving up if you're too gun shy, if you don't give it a chance to truly trend. So a lot of people would say trading options on a stock like Palantir is very aggressive, and I admit it's not for widows and orphans. You know, we're trading short-term options. We're not trading zero DTE though. We're not trading right in front of the current expiration on this Friday. We're always going out to the next Friday. So we're giving ourselves some time and also, of course, looking to exit before the expiration. But the beauty is it's about letting those gains, those runners stack up in your favor, right? You got to give that a chance. If you're looking for some kind of a growth oriented approach, I believe this is a really solid approach and it's very focused, right? We're not trying to be jack of all trades. I'd rather master one vehicle than be not mastering any of the a whole bunch of others, right? So the beauty is that it's just really laser focus. As we showed you early on, if you came in late, the $5,000 starter model portfolio from the beginning of last year through today on all closed trades generates over $25,000 in gross profit. That's gross before commissions and before subscription investment. So yes, you know, there's a subscription cost. We're going to give you a great trial special to get you started and try it out and let the system prove it. Don't just take my word for it. I want the system to prove it to you. And I'd rather you start small and build than go all in hoping to get a big score on your very next trade, right? It's more about building your confidence, building your trust, building your belief in the methodology, right? That's so important because when you have that belief, you're going to be ready to execute on a consistent basis and not making judgment calls to say, I don't like that one. I'm going to pass on that one. I really like that next one. I'm going to load up on the next one. That jumping around in capital allocation is not the secret to consistency and trading success. It's more going to give you very mixed results, sometimes better, sometimes worse. It's going to basically accentuate your volatility. I'd rather see you slowly and steadily building than trying to pick and choose. Of course, past performance can't guarantee future results. Future results will vary, but what will not vary is our commitment to helping you find every new trade opportunity that we see. So here's the gross return, 5,000 to 30,000 plus gross in just about a year and 7 months here, right? That's with the fixed $1,000 going in each trade with no compounding. So what we've set up for you here, and then I'll get into some questions, but I want to walk you through how you can take advantage of a super try it out special is you can get the real-time Palantir options trader trade alerts whenever we get a new Palantir signal in call when we're bullish and a put when we're bearish. And so what that would usually entail is that if you were looking at a month-to-month typical investment, it'd be like 297 bucks a month off of our website. But what we're going to do is we're going to take it down and give you even more time for even less than that 297. So we're going to give you more time and less uh, investment up front to just try it out. I'm not a believer in free trials. I've tried that many years ago and I found that people don't feel like they've got any skin in the game with a free trial. So you don't put much energy into following it, right? If you have a little bit of skin in the game, I'm not asking for much, but I'm saying just a little bit to make a commitment for you to follow this through and say, I think I can get a good ROI on this great starter package here. So we're going to give you more than just trade alerts, by the way. We're going to give you the settings and rule sheet. We're going to give you weekly video training from me directly. Every single Monday, I post a new update for my Palantir options traders on what happened last week, what worked, what didn't, what we're thinking is happening next, and then a dedicated email to reach me and my analyst team if you've got any questions. Like I said, $297 a month times 3 months or 90 days access would cost you $891 usually to get a 90-day trial. What I've done is I said, you know what? I want to really make it attractive, take it down by some 80% here, take it down to just $177. And so that way, when you think about it, 90 days access for $177 is less than $2 a day. And you think of what Palantir can do for you off of just one trade, right? So where do we set that up as a way that you can get started here? We set it up as a members.bigtrends.com/synergy page, right? The idea is that by the way, the members.bigtrends.com page in general is going to be your member site access link. When you get signed up, you can always go to that members.bigtrends.com membership page, log into your account, and you'll see our latest videos, our latest updates, the settings and rule sheet, and any other support material for your Palantir options trader subscription. So you even get that as a 3-month trial, not just being a longer term year plus subscriber, right? So the beauty is you get to learn this while you earn it and learn from it. And so the goal is to keep educating you. The learn while you earn mentality is so important. I'd always rather have you and me be green and growing than ripe and rotting. Attribute that quote to Lee Iacocca, former head of Chrysler. But I always thought it was a great one to say. We always want to sharpen the saw, the Stephen Covey style, to say, look, let's keep on getting better and better. Let's not get complacent. Let's keep on learning as we go. So some of the common questions we get, what are we doing as an option strategy? Are we doing any spreads? No, we're only buying a call when we're bullish or buying a put when we're bearish with the 1 week maximum hold, 5 trading days. Sent real time via email, and also you get it real time on your smartphone anytime in that 10, 10:30, or 11 o'clock 30-minute closes. So we'll get those closes. We'll get you in when we have a signal. We will not get you in if we don't have a signal. We never just hope or fire stuff out hoping something's going to happen. It's got to be quantitative system driven. 5-day time stop. And then we expect to do between 6 and 8 trades a month. So think about it, in the course of the next 3 months, we'd expect to generate anywhere between 18 to 24 trades, somewhere on average about 21 trades. So that's another benefit here. Now you see the average price of a trade, even in the last 12 months, has still been under $2 a contract, or $200 per 100 shares you control, right? So that would get you at least 5 contracts on average, on $1,000 of commitment. And then the bonus gifts you get today when you get signed up, you get the weekly video training. You'll actually, when you get signed up, even before I update next week's video, early next week, you'll get this most recent ones and recent ones. So you can go back and look at what we've been up to. You'll see you'll get our settings and rule sheet access for Palantir Options Trader as well. And then you'll get the ongoing access to me and my research team. Anytime you got a question, we give you a separate dedicated email address. And before I go into just what one trade can do to pay it back, let me also just remind you what that page looks like. Because that page, you go to the members.bigtrends.com/synergy, and thanks, David, for posting that. You see that we keep our pages, order pages, really simple. There's not a bunch of text, there's not a bunch of videos, not a bunch of distractions. We assume that you've come there looking to buy once you've reviewed today's presentation or any other support stuff we send to you in an email to basically say, okay, now you see the value. Now it's just your turn to act, to say, we can't take any other promo codes. We've taken it down already from $891 down more than $700, more than 80% off, right about 80% almost, where you say, okay, look, we're taking it down to say you can try 90 days for under $2 a day, just $177. That's all right there. All we ask is that you review the terms and conditions, which how we've been doing business for now, coming up on a full 26 years here in November at bigtrends.com. And you just agree to that. And then you can put your payment information on that secure page there, credit cards, et cetera. Make sure you get your billing information to match up with where you get your credit card bill. But also make sure you get that email right. That's your first really important data point after you get your order process, is that we know we can get the email to you so you can start reviewing all that you're going to get. So you can complete your purchase if you put your order information in there, or if you want to save inputting all that, you can click through the PayPal after you review terms and conditions, which are hyperlinked here, and then click agree to that, click over to PayPal, you log in, you choose your money source, click, 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 and you've just locked in 90 days of value for only 177 bucks. So either way you go, it's fine. If you're having any problems getting the order in, that's our 800 Big Trends number there. It's 800-244-8736. I have representatives sending by. You can also email them via client care at bigtrends.com to ask any questions about the Palantir Options Trader service and what you need to get answered to make sure you're starting to lock this in before it goes away. Okay, so that's the order page. It's really simple, really clean and easy. Remember, when you think of 177 bucks invested for the next 90 days, think of what one trade can do for you. Can do many multiples of that $177 investment, right? This one generated $1,093 in profits total. And the beauty is like if we can just get one trade up to a double pretty quickly, then even if the other part doesn't fire, you're basically looking at something that you still think you can take up to $1,000 and turn it into 500 bucks, if not 1,000 or more, right? So again, I can't guarantee what the next trade's going to be, win, lose, or draw, right? There's going to be some variability on that. It's more about following the system. So again, I really remind new subscribers, I'd rather see you starting small and saying, look at it as a process of learning the system, of getting comfortable with the risk and the reward, and seeing how the winners can well outweigh the losers over time, right? Over a larger sample of trades, right? It's just like, you can't predict if you flipped a coin where the next trade is going to be heads or tails. Half the time you're right, half the time you're wrong. But the thing is that what I love, even if we're right half the time in the strategy, we believe our size of win is so much bigger than our size of maximum risk that it's something that really is worth getting into your portfolio for the growth elements of those runner pieces. It can just keep going and going and going over that 5-day hold, right? So, like we said, we turned 5,000 into 30,000, $25,000 gross profit before the commissions, before the subscription investment. And we know that that's not necessarily going to continue, right? That it could actually go bigger than that, but could go smaller than that. You could still be plenty satisfied, right? What I always say is like assume there's losses ahead, assume that you're going to be sensible in managing your risk, assume that you're not going to get judging a service off of the next trade, whether it's a winner or a loser, but look at it as a process, look at it as a system. And so now it's then your turn to take action here. So I've got about a minute left. So 3 months of this is you're in for all in with all the support that we give you, with all the education. We want you to learn it. It's not a black box. We're taking it down by almost 80% from 891 to just 177 when you go to members.bigtrends.com/synergy. Let me just see. I've probably missed some questions here. Thanks for posting there, David. Appreciate that. And I guess that's answered the questions for now. But basically, if you have other questions, you can always call our 800 Big Trends number. You can email clientcare@bigtrends.com. They're on that order page. So feel free to reach out to us. We're there for you. And that's what, again, why we pride ourselves on 26 years and counting is that the support is so important. It's not just throwing stuff against a wall and hoping something sticks. It's being focused, it's executing consistently. And then anytime you got a question, know that we're there for you to support you in this trading journey with quality trade setups. Some win, some lose, but it's the size of the win that carries you. And so do take advantage of this for just 177. That's a tiny bit of skin in the game to help you leverage the power of Palantir with Palantir Options Trader. Thank you so much for being with us today. And thank you, David and Anka and all the team for having me on this timing research event. It's always fun to share with you indicators like percent R and ADX, how we use them together to generate Palantir options trades. Back to you, David.